Good morning, ladies and gentlemen. This is Butch Shorak. This is Market Forecast from Options University. It's Monday, October 28th, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's take a look at the week that just took place, where we saw the market, albeit a bit difficult, moved up and showed us strength again as we are in this strong bull market. Short-term trend is up, intermediate-term trend is up, long-term trend is up. In fact, it's been up for about a year since we hit our lows. In November of 2012, we're coming up on that year point where we are at all-time market highs. Let's take a look at the Dow, take a look at the NASDAQ, take a look at the S&P 500, and take a look at the Russell. And let me change my color here so it shows up a little better. There we go. We're going to look at red, S&P 500, Russell 2000, and then we see that every single percentage for the week is up. In fact, the lagger was, look at that, the Russell 2000. All right, then remember, that many times is a leading indicator for us. Dow up 1.1%, NASDAQ up 0.7%, S&P almost up 1 at 0.9%, and the Russell 2000 at 0.3%. Look at these lofty levels for the year. 18.8% out of the Dow. NASDAQ up 30%. Look at that strong S&P up 23%, our biggest indicator for the overall market. And finally, the Russell 2000 up almost 32% for the year. Quite an amazing year, and we are now in the best 6 months of the market, and we are experiencing what happens when you don't fight the Fed. It just keeps right on moving up. And we have a big thing coming this week, and it takes place right here on Tuesday and Wednesday. FOMC meeting begins Tuesday morning, and we at 2 o'clock in the afternoon have the announcement taking place. Little is expected to come out of this announcement, as we expect the Fed to basically hold tight as to where they currently are. They may talk a little bit about tapering, but they're not yet ready to do any tapering, and it would be a major surprise if they did. So, Fed meeting this week, the biggest news for the entire week. Other news of interest that takes place on Monday, we have pending home sales at 10 o'clock, Dallas Fed manufacturing survey at 10:30. We'll have other manufacturing surveys this week as we look at Tuesday morning. Fed meeting begins, and we see we have PPI, retail sales, before the market opens on Tuesday. Also, the Case-Shiller, S&P Case-Shiller announcement on Tuesday morning before the market opens. Then business inventories, consumer confidence. That's a big day as far as announcements are concerned. Looking at Wednesday, we'll look at ADP employment report and the CPI, the Consumer Price Index, as we see that what happens to the market before it opens, and then that big announcement coming at 2 o'clock, FOMC meeting. On Thursday, we have the same thing we have every Thursday morning, weekless jobless claims, which came in better last week than expected, with an unemployment rate of 7.2% and was expected of around 7.3%. So better expected out of jobless claims last week, and we'll see if it can continue in that matter. Also, we had an increase in the total number of people employed and a decrease in the number of those that want jobs and can't get them, according to government statistics. Chicago PMI comes out also on Thursday morning. All right, looking at Friday, November 1st, as we heard the month of October go, we have ISM Manufacturing Index at 10 a.m. So we see, there's also that motor vehicle sales, which is usually of interest, but really doesn't move the market very much. But we've got a heck of a week coming up as far as economic announcements as we continue on into the month of November. All right, November is where this whole thing started about a year ago, and here we are up at high levels of 1759.77. Notice for the last 2 weeks, what's our trend been? It's been up. What did we have? A breakout. What do we do when we have uptrending markets? Well, we look for support levels to buy, and we look at breakout levels to buy, and that's exactly what we got. Nice move up. In fact, let's take a look at a little tighter chart, and we see that as we looked at the week, looking at Monday, Tuesday, Wednesday, Thursday, and Friday, we had a hard time climbing above that level, but it did finally come up, closing the week at the high for the week as we come into that Fed meeting. We are a bit away from that 30-day moving average and 50-day moving average, but it looks like a healthy market as long as we don't hear much from the Fed. This should continue. Will we have pullbacks? Of course, that's what markets do. They will pull back, but don't expect any deep pullbacks. Big earnings coming out this week with Apple, Facebook, Xerox. So we've got earnings coming in this week, and we've already had a bunch of earnings come out during the previous month of October, and we'll see if this continues as we look at the Big Apple on I believe it's Monday. Looking at the Dow, there we are, having difficulty, hasn't gone up to a new high. These are our more mature companies, only 30 of them. Doesn't give us an idea of where the overall market's going. But again, last 2 weeks, the trend has been up, have yet to break out with the Dow. All right, let's take a look at that big runner, the NASDAQ, and we see, look at that, new highs as we just keep getting them left and right. New highs, of course, not all-time highs, but there we are, almost 4,000, and we're going to get there if the market keeps going as it is. Well away from the 30-day moving average, and at some point we're going to have a bit of a pullback, but it should be a rather shallow pullback. Last one was to the 50-day moving average. Looking at the Russell 2000, again, the same type of pattern. New highs as we see that just keep running along. Remember, that's our biggest gainer for the year, the Russell 2000. And what do we expect out of the VIX? A bit of a pullback. That's exactly where we're at that 13 number. Remember earlier in the year we were spending a lot of time around this 12 number, but these are just relative. That in the moment the VIX is low, premiums on our options are a little lower as we see that take place, and VIX is performing exactly as we would expect. Let's take a look at some of our other sectors. Looking at the TLT, our bond market, let's see what we've got there. TLT, look at, we actually have had a bit of a breakout as we see this bear market finally showing a little bit of strength, but certainly not showing us any of the strength that it did a couple years ago. Now let's take a look at that safe haven gold. Look very much like the bond market. Again, trying to break out of this previous high. It certainly ended its lower lows and lower highs as we had that gap up. And we see that we've got some resistance right up there about around 132, 133. All right, GLD, gold, safe haven, no real reason for anybody to be running panic till it's, the Fed changes its current attitudes. All right, next, looking at the SPY. What did we see for volume this week? Well, we went sideways and a little bit up, but it was all on lower volume. We're in a consolidation zone, although we did get newer highs, but not yet ready to run. Looking at the financials, XLF, our overall financial, we would expect this to go up with the market. Did it do that? Oh, a little bit of hesitation here as Friday market ended up at all-time highs and XLF did not. But nonetheless, still up its higher portions for the last 3 months. And then finally, oil. Well, we've finally seen it. We're talking about maybe getting oil below the $3 mark. Or I'm sorry, gasoline. So we see oil sitting right at the 200-day moving average, dipped a bit below it as we see a pullback in oil. USO is the ETF we use as an indicator of what oil is doing. So those of you that are gold members, stick around and we'll look at our stocks to watch. For those of you that are not gold members, welcome aboard. And if you want other free videos, there will be a URL at the end of this video where you can see other free videos from Options University. With that thought, thank you for being here. This is Butch Shorak. It's Market Forecast, Monday morning, October 28th, 2013. And Options University, your home for option education. Thank you.